Very good afternoon to everyone. So in the last class, I was just briefing the syllabus to you guys. So today we will get into the subject, the introduction to managerial accounting. Now, what exactly management accounting, as we have discussed in the previous session, that you have done financial accounting and you have seen the limitations of financial accounting. What are the limitations of financial accounting? It is historical in nature, right? It provides information about the concern as a whole. When it comes to financial accounting, the cost control was not possible. Whatever cost is incurred, that is recorded. The quantitative information is recorded, right? And there was a problem of window dressing. Window dressing means showing the profits even though they are not. In fact, the company would be in losses, but they will try to show as if they are in profits. Now, management accounting, if you look at the meaning of management accounting, see, managerial accounting, also known as management accounting, it's a branch of accounting which is concerned with identification, measurement, analysis, and interpretation of accounting information so that it can be used to help managers make informed operational decisions. Now, when you look at management accounting, it is referred to as managerial accounting is referred to as management accounting. Management is one part of it and the other word accounting. These two aspects we will be studying here. Let us look at some definitions. When you go to the definitions, according to the Institute of Cost Accountants of India, management accounting is a system of collection and presentation of relevant economic information relating to an enterprise for planning, controlling, and decision making. So this definition says it's a system of what you're going to collect and present the information for planning, for controlling, and for decision making. When you look at another definition given by American Accounting Association, management accounting includes the methods and concepts necessary for effective planning, for choosing among alternative business action, and for control through the evaluation and interpretation of performances. There are some other definitions also where they say management is the adaptation and analysis of accounting information and its diagnosis and explanation in such a way as to assist the management. So you should understand here, management accounting helps the management in decision making. So if you want to have effective management, you need to have an accounting called management accounting. It is, according to N.K. Bose, management accounting is accounting for effective management. All right. So this is what is management accounting and its definition. Let us look at the features of management accounting. Yeah. When you look at the features of management accounting, we say it provides the data related to accounting to the management for taking various managerial decisions, which helps in improving efficiency and effectiveness of managerial decisions. The first one you say is it is acting as an aid to decision making. Now, see, management accounting provides the accounting information in such a way that it helps that is helpful for decision making. Now, it is concerned with all such information which are useful to management in decision making at different levels. So it is an aid to decision making, whether we should continue the product or not, whether we should diversify some decisions what management wants to take. In those decisions, this management accounting is going to be a big help. The second one is it focuses on cause and effect. Now, when you look at this, it focuses on cause and effect. Go back to your financial accounting. What happens in financial accounting? Financial accounting is limited to the preparation of financial accounts only. But when it comes to management accounting, it is actually establishing the cause and effect relationship. For example, if there is a loss in the company, now the management accounting will probe into the reasons why there is a loss. What is the reason for loss will be actually probed in management accounting. Okay, if there is a profit, the management accounting will look at the factors which have actually affected the profit, which has actually helped in us increasing the profits of the organization. So we see the cause and effect relationship or cause and effect analysis in management accounting. That is another feature. Then use of special techniques and concepts. See, management accounting uses special tools and techniques to provide and interpret information for managerial decision making. The techniques used in management accounting are, it could be financial statement analysis, as you have studied in your subject called cost accounting, like standard costing, marginal costing. It could be budgetary control, it could be activity based costing, and so on and so forth. Then another important feature of management accounting is it is for internal use. See, management accounting is not mandatory. When you look at your financial accounting, we say it's mandatory. You have to keep financial statements. There are some regulations which say that you need to publish your accounts, you need to prepare your financial statements in the format prescribed and all. But when it comes to information provided by management accounting, they are used for internal control and they are not generally shared to the external stakeholders, though they are interested in the affairs of the company. But management accounting is basically for internal use. Then we have no specific rules. When you look at the rules, financial accounting is based on some standards, isn't it? Some fixed norms you are having. They have to be strictly followed. If you remember your accounting standards, we were talking about valuation of stock. I said that inventory valuation can be done in this specific method only. The stock should be valued at. Can I get the answers from this? The stock should be always valued at cost price, or nobody is answering. Least of the following two: estimated realizable value or the cost price, whichever is less. So we have certain methods of charging depreciation, how the depreciation is charged. Either it is in straight line method or WDV method. The accounting standard says you follow WDV method, so you have to do that. But in case of management accounting, there are no fixed norms, and management accountant can use the norms in his own way, the rules in his own way. So in case of management accounting, every concern uses its own rules and norms for analyzing the data or creation of any information for decision making. Then we have increase in efficiency. When you look at this, management accounting emphasizes on efficiency. Now the efficiency can be increased by setting standards followed by actual performances is measured, so that the management is able to pinpoint inefficient spots and corrective actions which can be taken, which lead to increase in efficiency. So you will set the standards, then you follow, compare them. Actual performance is measured. They will compare these two what is set as standard and what is actual. So the difference, if any, they'll try to find out where the problem is, those pinpoint inefficient spots, and then corrective actions can be taken. So in a way, it is increasing the efficiency. Then we have supplies information and not decision. You should understand that management accounting is an aid to decision making. Management accounting is not decision making, guys. Very important. Management accounting is only giving the information. It supplies the information so that management sitting there on the top can take decisions. Okay, the decisions are to be taken by the top management, and whatever information they need to take the decision, such information is actually supplied by the management accounting. So the quality of decision basically depends on the caliber and efficiency of the management and how they use the information provided by the management accountant. Is this okay? And one more we have here is the objectives for today's session. So objectives of management accounting. It helps, the objective of the management accounting is to help planning and policy formulation. So management accountant prepares analysis of financial statements, which are very useful for planning and for policy formulation. He prepares estimates for the future. They suggest best alternatives for decision making. So with the help of this, the management can actually plan and formulate the policies. Then we have helpful in organizing. So management accountant helps in organizing the activities of organization by using the delegation of authority and fixing of responsibility. Management accounting helps in establishment of cost centers, preparation of budgets. So we basically try to look at what is required, and with the help of preparation of these budgets, it is basically helping the management in organizing. It is helpful in coordinating. Management accounting helps in coordinating the different activities of the organization. For example, while preparing purchase budget, production budget, or sales budget, labor budget, he also prepares a master budget, which helps in coordinating among different budgets. It helps in controlling. It helps in interpreting financial information. Financial information is of technical nature, and most of the time managerial personnel are not able to understand the use and significance of these financial statements. So management accountant explains these statements to the management in a simple language. Maybe they will use ratios or charts, diagrams, so that the management can easily understand these figures and take appropriate decisions. So it helps in interpreting financial information. It is helpful in communication. Management accounting helps in keeping the management fully informed about the latest position of the business, which is going to facilitate the management in taking timely and right decisions. The management is being kept informed through regular financial reports and performance analysis of various departments to the management. Then we have, it helps in qualitative information. You should understand that management accounting also helps in providing qualitative information to the management. Sometimes the qualitative information is more important than the quantitative information. Maybe you are going to give information regarding the dedication of some employees, relating to your customers, or the quality of competitors, all these things which are not quantitative in nature. Even such information will be provided by the management accountant to the management. It helps in decision making. This point already we have covered. It uses different tools and help the management in decision taking. And it is helpful in tax administration. So management accounting helps in assessing various tax liabilities and depositing correct amount of taxes with the authorities. So basically, this is what is in this today's session.